What's up? It's me again, Tutor Alvin here for Igcse Accounting. So today, in this lesson, we're going to look into our accounts called the control account. So before going into control accounts, let's talk about ledger one more time. Okay, our ledger is a book that has many pages of T accounts. Assuming we are using 3 books of ledger, okay, one book of ledger is used for our general ledger. So one of the book is used for as a general ledger. So general ledger are the ones, the items that you will see inside the financial statements. Okay, normally that's what you see. Items at our financial statements, in our income statement and also our SOFP. All the figure comes from the general ledger. Okay, so general ledger is made out of 2 things. One is called the real accounts, particularly all and everything of our asset accounts. Another accounts are the nominal accounts, all the liability, expenses, the income, okay, capital, all the returns, purchase returns, sales returns, and many more. All the liabilities, all the expenses, all the incomes, they will be there. And one more thing will be there is our topic for today called the control accounts, in which we'll be dealing with trade receivables, control account, or some books, most of the time we will see it as sales ledger control accounts. One more is the trade payable, or the so-called purchases ledger control accounts. Now, another part of the ledger, we have another 2 more books. Okay, we can separate into 2 books because we have a lot of stuff, let's say. This is called the personal accounts. In which we have the sales ledger and we also have the purchases ledger. Okay, so personal account is like a references. Sales ledger is one of the books that records a list of all of our customers who owes us money. Okay, and purchases ledger will be a set of books records all the suppliers T accounts. Okay, so this is for our customers, credit customers, and here will be all our credit suppliers. So credit customers will be our trade receivables, and for credit suppliers will be all our trade payables then. Okay, so we have Mr. A, Mr. B, Mr. C, Mr. D, and then on the other side we have Miss Z, Miss E, Miss Y. Okay, so sales ledger will have a balance of all debit side. Okay, that is in general, yeah. We will have a debit side balance. Here. Okay, let me give you a figure there. Let's say we have a 1K, 2K, 3K, and there's a 4K. Now, and then let's say we have another special account. Let me advance. Somebody, a customer, happened to have 1,000 on the credit side. I'll talk about that. No need to worry. Okay, so there are actually a debit balance here for sales ledger. For purchase ledger, there will be the credit balance. Okay, let's say the 2K here, 2K balance, our supplier that we still owing to them. And then for Y, supplier is owing us, I'm owing Y supplier 1K over here. Okay, so the sales ledger, the total, okay, the total balance, all these customers A, B, C, D is owing us money because trade receivables, they are our credit customers. They haven't paid us yet. So they are a debit balance because they are an asset. Asset is on the left-hand side. Okay, so they are owing us in total of a debit balance of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10,000. And somebody has a credit balance of a 1K. Okay. On the other hand, suppliers that we owe to, we total owe them 2, 3, 4, 5. We are owing them 5K, a credit balance. Now, this total will go into something called the control accounts. Okay, so control accounts means what? What are the control accounts for? What is it for? This control account is used as a control system. It will make sure that the control accounts figure must equal with the respective sales or purchase ledger totals. Okay, now because we will produce our financial statements later on, so one part of our financial statement called the SOFP. Do you remember our current asset we have a trade receivables, and in our current payable there we have a trade payables. If let's say that's the only payable that you only have one trade receivables and one trade payables, if you want to put the name, it's okay if that's the only one. But still, we also will change them later on to trade receivables balance owing us 10,000. Let's say your trade receivables is the only got one fella is your customer. But in real life, we have many customers. We also have many suppliers. You do not want to mess up your SOFP with a list of all trade payables name being listed down in your current liability section. And also same goes to your trade receivables, your current asset section. You do not want to write all the names of all the hundreds of customers' names. If not, your SOFP will be very long, and people will know who are your suppliers and who are your customers. Therefore, no privacy. So that's why we have something called the personal accounts. Okay, this is just serving as a reference purposes. In your university level, they'll call it as a memorandum. So these are your reference only. So all the totals here must tally with the ones that you written down in your control accounts. And the amount that you record into the control account must come from your books of prime entry, not from the sales ledger over here, not from the purchase ledger. It's just serving as a references to make sure that both are balances. Okay, from books of prime entry. Meaning to say, for example, all the total sales will come from the sales day book. As for the purchases, total purchases, all the credit purchases must come from the purchase day book or the purchase journal. Once payment made, all the total payments received from customer or you pay to supplier must take all the total from the cash book. Any returns, all the returns, the total returns, purchase returns from the purchase return journal. And if it is for the sales return part, you got it from the sales return journal. Now, if there's any special occasions, special cases like irrecoverable debt, means a customer who are not able to pay you back totally 100% because bankruptcy, you get it from the general journal. Irrecoverable debt, extra interest charged by supplier, or you charge the customer for late payment. Any contra entry, meaning a smaller figure offset the bigger figure, which I will talk about later on. Any others such as extra delivery charges, extra carriages, carriage inwards, carriage charges, delivery charges will be found in the general journal. You take all the totals. So notice everything is all about the totals, all the totals. Yeah, same goes for the special case here, all the totals. You take them from the books of prime entry and you put into your control account. Then after that, you tally with your sales ledger and the purchase ledger for their own individual accounts. Okay, the totals of whether same or not. The totals over here and the control accounts. If it's okay, then good. If it is not okay, then you need to perform a reconciliation, which you'll be learning next time in your university level. So, to be honest, the figure that happens that you record in your current asset later on for your SOFP, the trade receivables portion and the trade payables portion is actually coming from your sales ledger control account for the trade receivables and purchases ledger control account for the trade payables. So technically speaking, your current asset is a control account for the trade receivables. It's just that we never put the trade receivables control account wording there. We just put it as trade receivables, the total. If not, it's going to be sounds weird. A control. Okay, same goes for your trade payables. Okay, in your current liability portion. You're not going to write as a trade payables control account or purchase ledger control account total. No, you just write trade payables with the total coming from your control accounts in your general ledger. Okay, so this control account will serve as what? It can help to check your arithmetical accuracy, whether there's any figures mistakenly add on, okay, casting errors when you calculate the totals between your sales ledger, purchase ledger, and the control accounts. Which one is correct? Okay, where if there's any mistakes, you can find them right away. Then also it can help to reduce fraud because a different person is doing this job. Okay, somebody else, and so it will provide you a summary of all the purchases during the year or for the month. a summary of all the purchase returns, sales returns, and etc. All the totals. It give you a summary. Okay. Now, just now we saw the credit portion. Okay. So it happened out of the blue, a weird situation. Okay. So sometimes we have a double balance. If let's say we open up the sales ledger control account, we happen to have a debit balance of 10K over here, and then there's a funny weird 1K balance. Okay, brought down. Let's say we close the account, entire account. So what does this happen? Okay, now imagine a customer who have already settled off their debts. And suddenly, your customer, hey, I want to return something. Yeah? How does this happen? Okay, our sales ledger control account, as in our trade receivables control account, it must be a debit balance. But what happens a credit balance? Okay, so let's say Mr. E, right? He already settled the debt. Okay, so there was a sales happening, 2K, and then he settled off the account with 2K. Then suddenly, last minute, he found out that one of his product is malfunctioning. So he returned that product. So that product worth 1,000. So that would be a sort of a sales return, correct? You return us. And then we're like, oh dear, I'm closing my accounts now, and then you are returning this. Okay, anyways, it's the end of the month, so I just close first. So there's a balance carried down with 1K, and therefore balance brought down 1K. So that's the story over here. So later on the next month, we will refund that particular customer. And therefore, we will close the account with this weird bank of 1K, and we title them as a refund, in which it look weird, right? Yeah. So this is just a adjustment. So E, technically speaking, E has nothing to do with us already. He has not owing us any more money already. But because of this faultiness, the sales return happened, so we need to have a weird credit balance, in which we owe them money, then later on we need to refund money back to them. And therefore the account's closed officially the next month. Okay, so other than sales return, we also can have discounts. You forget to give them discounts. So now you give them discount. It's like a last minute thing. Or they are paying in advance for something. They're paying in advance. Instead of 3K, instead of 2K, they pay us 3K. They pay money in advance. The balance 1,000, later on we just knock it off with something else, like if our customer buys something from us. Things are happening out there like that. And then, discount or overpayment. Same goes for our purchase ledger control account. For purchase ledger, one of the supplier, we return things to them, or we overpay them, or they forgot to give us discount. So last minute they give us discount. Same goes for the trade payables side. Okay, so now here are the format for our sales ledger control account. Okay, which is something related to our trade receivables. Purchases ledger control account is something to do with our trade payables, all the totals. Yeah. Okay, so this is the format. So it's very, very simple. Anything that increases our trade receivables debt to us, we put on the debit side because their nature is an asset. An asset has a debit balance. You still remember asset equals liability plus capital, asset over here. So anything that adds their debts to us, okay, they owe us more, you put already on the debit side. And if they pay us money, means their debt reduces, so all on the credit side over here. They return something, they pay money, and then we give them discount, irrecoverable debt, minus off. Okay, now if let's say there is a dishonor check, bank will be credited and they will be debited. Because actually we got the money. Now, no. Because the bank dishonored the check has problem. So by right, they already reduced the amount here, reduce the debt. But because one of them, $100 is being dishonored, so it's just like we go the other way around. That's all. And sometimes it will accompany with the discounts allowed for this 100. Maybe a $10. There will be also another discounts allowed, dishonored, cancelled over here. Okay, so balance CD over here. Sometimes you also will have a balance page. Okay, now purchase ledger control account, the same thing. Okay, so purchase ledger, that will be our trade payables. Trade payables is our liability. Asset equals liability plus capital. So the liability will always have a credit balance. So anything that increases our debt to us, our debt to them, okay, we owe our supplier more, we credit them with all these purchases, interest charges. Once we return things, we pay our debt, we will debit it. And we get also discounts. Okay, the refunds, you just think of that story over here. Okay. Now, there's this one thing called the contra entry that everybody might be wondering, what is that contra entry over here? Contra here and contra there. Basically, contra is to reduce both parties' sale control account. I mean, both their parties, their own individual account, but later on the control account, we sum up all the contras. Okay, so let's say this is the case, A and B. Okay, so contra happens when both parties is each other's customer and also supplier at the same time. So let's say A sells on credit some goods to B, let's say $100. So B is owing A. Then later on, the next day, B sells goods worth $80 to A. So A is owing B $80. So instead each other giving each other a full amount of 100, and then after that you give me 80 and I give you 100, might as well just contradict to each other, just contra. So instead of B owing 100 to A, because A will later on give $80 to B, so might as well just net it off. 80 will be the contra amount, and later on when B makes the payment back to A, B will just give back $20 instead of 100. Because I sell to you, you sell to me. So we are each other customers, so the lower one knock off, so whatever balance, the ones who owe the balance pay the balance. Okay? B will pay A $20. So $80 will be the contra for both here. That's all. Okay? So purchase ledger control account and sales ledger control account is one of the sort of a popular questions to ask in your exam, especially for paper 2. If you know the basics, the understanding as well, it is very, very easy to solve. Okay? So that's all for control accounts for today, and I'll see you all in class or in our next video. Okay? Bye!